All right, Evan, welcome back for another episode of Carnivore Trades. Today is Thursday, November 11, 2021. So bond market closed for Veterans Day, and it is causing the markets to be anemic. That's to be expected. Bond market dwarfs the stock market in size, and we're just seeing kind of some chop here. As we said, the cat's away, the mice will play. VIX coming back in sharply. And again, when there's just not a lot of participation, not a lot of volume, you're going to see that kind of action in the VIX and in the markets. So we always give the market an upside bias when there's any sort of holiday. And we are getting into that period. We do have the Thanksgiving holidays soon, and that is going to, give us some light volume trading as well. But we do have OPEX next week, so there could be some volatility next week. And there's a lot of news. We got the spending bill. There's a lot of things going on news-wise. There's a lot of inflation data and so on. And we just went through earnings season, but OPEX week should be a pretty volatile week. That said, we've been doing really well here with Carnivore Trades. 2 winners last week, 2 winners this week. We're in the money on all of our other positions as well. We just took another winner today, and we're still holding the second half of that. So things are going really well there. If you want to check that out, come find me on Patreon. It's only $5 a month. The members pay for years worth of service in one trade. So if you want to get in on that, come check it out. Any case, dollar index, not really having a quiet day. Dollar index up another 1/3% today, really pushing through that resistance area. We talked about this yesterday, and this looks to be on breakout. Barring a major reversal tomorrow, it would have to be down very big tomorrow to negate this move here. So it would have to close, below essentially 94.75, that area, to make this a failed breakout. But as of right now, it looks like the dollar is ripping. And, I've been talking about this for several months now. The dollar, has bottomed for the foreseeable future. What happened here is everybody got overcrowded in the short dollar. Oh, the dollar's going to break 89. It's going down to 85. The market's going to go up. But, okay, well, that's what happens when you get a crowded trade. Boom, short squeeze. They try to bring it down again. Boom, another short squeeze. So dollar index ripping higher. And so let's talk about yields here. So the bond market is closed, but if we just look at a TBT, that still trades. We look at an hourly of TBT. This is consolidating bullish right now inside of this move. So we could see some further downside in tech tomorrow once the bond market resumes. And it is uptaking a little bit here as we approach the final half hour of trading. As you can see, tech getting a bounce today. Not too big of a surprise. It did take a pretty big hit yesterday, so not surprising to see a little bit of a pause. We're seeing stocks like Nvidia get a little bit of a bid. Tesla is kind of flattish, but had a really nice bounce yesterday. AMD also getting a bid, up 4%. Let's take a look at the semis. So those are helping the semis, up 1.6 right there. IGV, which had a big reversal yesterday, took out really all of last week's gains. That's getting a little bit of a bounce. So tech getting a little bit of a relief rally here in the near term, but again, we got to watch those yields. And when the bond market resumes trading, in fact, PST, also short treasuries, that's actually having a really nice day, up 0.5%. So, we got to watch tech tomorrow when the bond market resumes. And if it starts to sell off, and if the yields start to pop again, it's going to put a lot of pressure on tech. So let's just watch out for that. Precious metals having another nice day. Good to see some follow through there on gold. This will run into resistance here. It's not just going to blast through that. So we probably will see a little bit of consolidation, get a lot of messages about gold. And, it got above my weekly resistance level and it just shot right up there. But, if you want to own gold, just look for pattern here. Again, GDX also having a nice day as well. But you guys look for pattern. Any sort of pullback, that's where you want to enter. You don't want to chase it up here. Silver having a nice day also. That has triggered a daily inverse head and shoulders. So that could get up to the 28 handle if that pattern would play out. Now, I will say this. Tomorrow, if we reverse and close back below 25, that pattern's negated. Or at least it's failed on a weekly basis, and it'll have a chance to trigger that next week, but at least in the meantime it would not be triggered yet. So on a weekly pattern, which is the more dominant pattern, that's when we want to watch, and I'll be watching this very closely for tomorrow. But precious metals having a nice day regardless. Platinum also getting a nice little bid there, kind of looking like the silver chart there. And palladium, the weakest one right now, but had that nice little kind of flag pattern, and it is holding up there, still inside of Monday's candle, or excuse me, Tuesday's high. So Palladium definitely underperforming a little bit there. Switching gears, let's talk about Bitcoin a little bit. So Bitcoin, just the reason why I'm talking about this is you could make a case it has kind of a cup and handle. So here's your, obviously the big cup. And then you made a new high. So you had an outside day. Last 2 days, you were able to make new all-time highs. But yesterday it did reverse pretty sharply, but nothing terrible. It's still above all 4 major moving averages. So nothing really wrong. So, you know, I guess if you're looking to trade Bitcoin, you could trade it off of this cup and handle. But just wanted to point that out. And again, Bitcoin is moving higher with yields. So if we expect yields to continue higher, that would make sense that Bitcoin will move higher. Same thing with the IWM. If you want to own the IWM, you just buy the pullback here. If it gets back into this 20 moving average in this 234.50 area, that's where you'd look to buy. Now, I will say this, I believe I said this earlier this week, but if we were to close below this area by tomorrow, which would be Friday, that would give you a failed breakout on the IWM. So just, you know, we're watching that closely. I don't think it will happen. I am kind of bullish IWM, but if you want to own it, that's where you want to enter. So let's move on to crude. Crude oil's kind of been all over the map the last couple of weeks. We got to that 85 level, then it looked like it wanted to break out again, and then it reversed, and now it's just kind of pausing. Again, we'll just have to, you know, wait and see with it. Same thing with the XLE. It's just kind of been all over the map, just chopping, but this is ultimately kind of bullish consolidation. For the XLE, you got right back to this trend line. In fact, some of you guys have been following me, you know, about this trend line right here. I've been talking about that for a while. We got through that, and now kind of on the weekly pattern, we're just kind of consolidating there. So nothing really wrong with the XLE here, but we'll just have to wait and see. XOP, same kind of deal, and obviously the OIH, same thing as well. Let's just talk about nat gas before we wrap up. So we talked about this looking a little bit trappy yesterday. We did not trigger the head and shoulders. It did manage to close above the neckline, and now today nat gas up 5%. So getting a bid there off the lows, and you know, we'll have to wait and see. It could come back up, and then, you know, then it could come back down and trigger it. But as of right now, that definitely looked a little trappy yesterday, and nat gas getting a bid off of that trend line there. So nat gas holding up for the moment, and we'll just kind of give it the upside bias for now, and we'll just leave it at that. But in any case, we will see what happens tomorrow when the bond market reopens, and that will tell us a lot more about what this market is going to do. But anyways, take care, guys, and I will talk to you later.